currency. I'm going to currencies, share my bias with you guys. Okay. Then if you have any instrument, any pair you want us to analyze, just type it in the comment space. If there's anything you want us to analyze, just type it in the comment space. Few minutes, please. Okay, so the first pair we'll be starting with is Australian dollar USD. You know the 7 major currency pairs: Australian dollar USD, GBP USD, Euro USD, New Zealand USD, USD JPY, USD CAD, and USD CHF. So the 7 major currency pairs. So starting with Australian dollar USD, first thing is to look at the weekly time frame. You need to know the trend for the week. When you're analyzing the market, is very important. Whether you're a day trader, whether you're a scalper, you should know the trend for the week. The trend of the week is what will determine the trades you will take on lower time frames. Very important. And it's very important that you do this before markets open. When the markets open, you should analyze the market. You should know what you will do for the week. When market opens, the next thing is just execution, execution, execution. It's not when the market is open that you start analyzing the market. Okay, so let's start with Australian dollar USD weekly. What do we have on the weekly time frame? And the first thing I want to consider is the candlestick formation, how the candle closed for last week. Okay, so last week candle closed as we could call this a spinning bottom. Okay, it closed as a spinning bottom, which indicates change in trend from bearish to bullish. This indicates change in trend from bearish to bullish. Okay, so let's go down to daily time frame. After the formation of the spinning bottom, what do we have on daily time frame? Now, if we switch to the daily time frame and we have a candlestick formation indicating change in trend and a bullish candle closing after it, if a bullish candle has closed after that candlestick formation indicating change in trend, there's a high probability that Australian dollar USD would be bullish. Okay, so let's go down to daily. Let's see what we have on daily. So you can see what we have on daily. So at the moment, Australian dollar USD is bullish. You cannot sell Australian dollar USD. So this is a bullish setup on Australian dollar USD. If you want to sell, as you see here, what we have here is inverted hammer, which indicates change in trend. Now, the next candle that closed above the high of that inverted hammer. That is a strong indication that we have more buyers in the market than sellers. So you cannot sell with what we have here. But also on this daily time frame, another thing you should consider is this previous support zone resistance. So the market tested that resistance and there was a rejection from that level. So there's a probability of price breaking this resistance and keep going up or breaking the support. So these are the entry levels. At the moment, Australian dollar USD is bullish. If this resistance is broken, Australian dollar USD will chase for this next resistance, support zone resistance. It will get to this level. If it breaks this level, then it could get to this fair value gap. It could get to this fair value gap. So these are my entry areas for sell, these levels. These are the areas I would consider selling Australian dollar USD. It's either price breaks this support or price pulls back to these levels. These are the Australian dollar USD. Long term, I'm bearish on Australian dollar USD. So all I will be looking out for this week is a sell setup. I wouldn't be buying Australian dollar USD this week. I'm interested in selling Australian dollar USD. So like I said, this will be my entry levels. It's either pulls back to these levels. These are the areas of, selling. These are the areas I will consider selling Australian dollar USD. You could also apply the Fibonacci tool to know how far price would retrace. You could apply the Fibonacci tool from the swing high to the swing low, recent swing high and recent swing low. So what we are interested in is price retracing to level 50, 61, or 79.0. Okay, so as you can see at level 50 is not a key level. So there's a probability that price will break this level 50 because it's not a key level. We don't have a support or a resistance at that level. But at 61.8 is closer to a support level. So this is a key level. Then 79.0, not a key level. So it is likely that price will pull back to this level before it starts selling. So this is the area I would consider selling Australian dollar USD. Next is New Zealand USD. Start with the weekly. Both pairs are positively correlated. So if you're looking for sell opportunities on Australian dollar USD, then we should have a sell bias for New Zealand USD. So you could see how last weekend it closed. This is a doji. It's a doji indicating change in trend from bearish to bullish. So let's see what we have on daily time frame. We have this is a spanning bottom and an engulfing candle. So at the moment, New Zealand USD is bullish. New Zealand USD is bullish. We can't sell New Zealand USD at the moment. We can't. This is a bullish setup. Okay. So if I'm to sell Australian dollar, New Zealand, so if I would sell New Zealand USD, I would apply Fibonacci from the swing high to swing low. Okay, you can see price is above level 50. Level 50 is equilibrium. Anything above level 50 is premium. Okay, premium means it's expensive. Okay, and when it's expensive, what happens? People will withdraw, people will sell. Okay, so when price gets into this level 61, 79, we say price is at premium zone. So there's a probability that price will pull back from that zone. So you can see it's approaching level 61.8. You can see. So if I'm to sell New Zealand USD this week, I expect price to get to this level 79.0. You can see at this level we have a support, we have a resistance. So this level is more important than these levels because we have resistance. Can you see it? Here we have support stone resistance. Go back here, support. You go back here, resistance. So this level is a key level. So there's a high probability that price will pull back to this level before New Zealand USD will sell. So this is where I'll be considering selling New Zealand USD. You can't buy. I wouldn't advise that you buy now. This would have been the best area to buy New Zealand USD. If you execute a buy now, the risk will be very high. The risk will be very high. So if you're considering buying New Zealand USD, you should expect price to pull back. You can see apply the Fibonacci, take it from this swing low to the swing high. So if you are considering buying, wait for price to pull back to level 50 or level 61 so that your risk on the trade would be very small. If you jump in here, your risk will be very high because this would have been the best place to set your stop loss. So if you are buying from this price, you'll be taking a risk close to 85 to 86 pips. Yes, you can decide to set your stop loss maybe 30 or 40 pips below your entry price. But the thing is, they can easily hunt for those levels. They can easily hunt for your stop loss. But if the stop loss is at this level, they might not get there before price will pull back, move in your direction. So this is the best level or best price to use as your stop loss. Okay, so the smartest thing to do is wait for price to pull back. So if price pulls back to this level, your risk will be less than 30 pips on that trade. Even if you lose that trade, the risk is still worth it. But entering at this price now is at a very high risk. Very high risk. Let's assume at this point, New Zealand USD was sold for 100 Naira. Now it is selling for 500. Why would you want to buy at 500? When you knew that a few days ago or a few weeks ago, it was sold for 100 Naira. So if at all you want to buy, wait for price to pull back. So even if it doesn't get to 100, if it gets to 250, you can still take the risk at 250 or 200. But entering at 500 is at a high risk because price can just drop from that 500. Are you getting me? So I'm still bearish on New Zealand too. So I just shared with you where I'll be considering selling New Zealand USD. This is where I'll be considering. We also have another block here. There's an order block here. We also have a fair value gap. Okay, so this is a fair value gap. Okay, so when price moves into these levels, there would be a candlestick formation indicating that the trend is changing from bullish to bearish. There would be a candlestick formation. Okay, so that is what I'll look out for at these levels. It could be shooting star, it could be bearish engulfing, it could be double top. That's what I would be looking out for at these levels. Okay, so that's my take on New Zealand USD. The next pair is USD CAD. If New Zealand USD is bullish, Australian dollar USD is bullish, USD CAD should be bearish. They are negatively correlated. So let's start with the weekly time frame. Also, we're supposed to look at the monthly time frame because the monthly candle just closed on, I think, on Friday. So we're supposed to look at the monthly time frame also. Very important. Supposed to look at the monthly. So let's see what we have here. So the monthly just broke out from, we had a resistance here. Okay, resistance on supports. Okay, so last month's candle broke out from this support. Okay, so a lot of retail traders will jump in and start selling, right? Because this is a breakout. Let's see what we have on weekly. You can see the formation we have on the weekly does not support the monthly pattern. You can see breakouts on the, what's it called? On the monthly. Here we have a spinning top, and the next candle has closed bullish, which indicates that we have buyers in the market. There's a probability that price will change or the trend will change from bearish to bullish. So on the weekly, you could apply your Fibonacci to know how far price would retrace. So you could apply Fibonacci from the swing high to swing low. You have level 61 and you have level 79.0. Now, at level 61, do we have a key support at level 61? At 79, there's a key, there is a resistance level here. We have resistance and support level at that level. You can see this is a resistance, and also we have a support here. So this is a key level. This level is more important than 61.8 or 50.0. So let's go down to, so if you are buying, your target should be at this level, 1.350. That's about 200 pips. 200 pips. Let's go to daily. So you can see 61. Okay, you can see at 61 on daily time frame, we have a resistance level. So that could be your, you can use it as your TP level. This could be your TP level. Okay, it's a support here. Then you have it as resistance here. So it's a key level to level 50, close to a support too. So those levels are key. They are key levels. So you have the resistance here, support here. If you go back here, you would see it's also a support. So this level is key. This level is key. And also this zone is key. And if you look at what we have here on daily, you can see that the market just broke out from this resistance. It just broke out from this resistance. You can see. So this indicates change in trend. This indicates change in trend from bearish to bullish. So weekly and daily is bullish. The weekly and the daily is bullish. So you should look for buy opportunities this week. But if you are considering selling, I'll suggest you wait for price to break this support. But before price to break this support, price will definitely go up. It will definitely go up to gain more momentum, to get more people to sell. A lot of people will not want to sell at the current market price. To get people to sell, they would have to push price up to entice people to sell. But at this price, not many people would want to sell. So price must go up to a certain level before it drops. That's my take on USD CAD. I would be buying USD CAD this week. And like I said, my target is at this level. I'm aiming for like 200 pips, and my risk will be between 40 to 50 pips on USD CAD. The only thing that will make USD CAD sell this week would be fundamentals. Remember, this week is NFP week. It's going to be an interesting week. Great opportunity to make money, and also great opportunity to lose this week. The market will be very volatile. We check the calendar. We have several major news to be released this week. Several major news. Tomorrow by 3 p.m., we are expecting ISM manufacturing PMI. On Tuesday, no major news from the United States, but we have two major news from Australia, cash rates and RBA rate statements. On Wednesday, FOMC meeting minutes by 7 p.m. Okay. Then we have OPEC meetings. Wednesday will be very volatile. And then on Thursday, we have non-farm employment change, unemployment claims, and ISM services PMI, and also job openings. This week could be very volatile. To be very volatile. Then on Friday, several major news from Great Britain, Canada, and United States. So this week, there will be great opportunity to make money and great opportunity to lose money. So as you trade this week, be calculative. Be calculative. Ensure you apply good risk and money management. Okay, so next pair is GBP USD. Should expect a bullish move on GBP, a bearish move on GBP, bearish move on GBP. GBP USD and Australian dollar USD are positively correlated. So we should expect bearish move on GBP USD. I think the US dollar is still very strong fundamentally. USD is still strong. Okay. Let's start with the weekly. Oh, you can see it is obvious. So what we have on the weekly. Last week candle closed as okay. This looks like a spinning bottom, but the previous week closed as a bearish candle. This is a strong indication that GBP USD is bearish. That's formed the resistance. Okay. If you want to buy, this resistance must be broken. If you want to buy, this resistance must be broken. Another thing we need to consider here, you could see that the rejection we experienced last week on GU was as a result of this previous resistance. You can see this supports. Okay, you can see it's resistance, not support. That's the reason for the rejection we experienced last week. So if this support is broken, then we should expect anything that makes 4-hour candle closes below this support. We should expect GBP USD to drop to this next support. We should expect GBP USD to drop to this next support. If you apply your Fibonacci from this swing low to the swing high, this is weekly time frame. Let's go to daily. Let's see. So you can see what we have on daily. So we should expect GBP USD to drop to this level, and it's likely going to break this support. That's my expectation on GU this week. That's my expectation on GU this week. If you look at the chart here, you would see that they've already hunted for stop loss. You can see this candle is a stop loss hunt candle, this candle. So they've already hunted for stop loss. You can see. So GU is bearish at the moment. If you look at the daily, we had a spinning bottom. Then the next candle engulfed the spinning bottom candle. So if you want to sell, and this is another thing you can do. You go to lower time frame and apply Fibonacci. You had applied Fibonacci on, let's go to 4-hour, so that you know your price will start pulling back. So if you had applied Fibonacci from this swing high to this swing low, you can see the market had hit level 50. And when the market hits level 50, what happened? Pull back from that level. Okay, so GBP USD is bearish at the moment, but if this resistance is broken, you should expect GBP USD to pull back to this level 79. If it breaks, if this resistance is broken, GBP USD could get to this level before it starts selling. Okay, before it starts selling, it could get to this level. So if you want to risk selling and you know there's a possibility for price to get to this level, you want to set your stop loss, let's say 10 pips above that level, that risk will be too high. It will be too high. So wait for price to pull back to maybe 61.8 to reduce the risk on the trade. Okay, so I expect GU to sell this week. I'm bearish on GU this week. I'm looking for sell setups on G. Let's see what we have on 1 hour. You can see break. Is a break of structure on 1 hour time frame. So this structure will play out on 1 hour structure. This breakout structure will play out on 1 hour. Okay, to play out on 1 hour. So that's my take on G. I'm bearish on GU this week. Let's look at which other pair. Euro USD. If there's any pair you want us to look at, please drop it in the comments space. Okay. So let's see what we have on the monthly. We have our support here. We have resistance. So it's that price goes upward to hit this resistance or this support. Let's go to weekly. You can see on weekly. You can see what we have on weekly. This is a spinning top indicating change in trend. You can see, and the high of that spinning top is at a resistance level. You can see resistance, resistance. So you would only buy if this resistance is broken. But at the moment, this is a sell setup on Euro USD. This is a sell setup on Euro USD. So if you want to sell Euro USD, like I said, if you want to buy, wait for a candle to close above this level. You cannot buy right now. You can't buy. There has to be a breakout from a resistance before you buy. If you want to sell, there has to be a breakout from a support. Okay, so let's identify last week's support. Last week's support. This was last week's support, and this was last week resistance. We had a resistance here. We also had a resistance here last week. So if a candle breaks out from this resistance level, there's a high probability that price will keep going up. And if this support is broken, there's a high probability that price will keep dropping. So if you're considering buying, ensure that a candle closes above this zone. Okay. And if you're considering selling, ensure that a candle breaks out from this support. And if price pulls back into this zone and you have a good candlestick formation indicating change in trend from this level, then that will be your entry for sell. If you have a shooting star, a bearish engulfing at this level, or hanging man, or doji, or spinning top, then you should look for sell at this level. But if price keeps going down from the current market price, you sell below the support. I hope that is clear. I hope that is clear. Which other pair is left? USD CHF. I think that's the last pair. Then USD JPY. USD CHF. This is the monthly setup. Last month's candle tested this support, and there was a rejection from that level. Let's go down to the next lower time frame, which is weekly. On the weekly, what do we have on the weekly? Okay, so on the weekly, you can see what we have on the weekly. So this indicates change in trend from bearish to bullish, from bearish to bullish. So I'm looking for buy opportunity on USD CHF. USD CHF, Euro USD are negatively correlated. So if I'm considering selling Euro USD, I should look out for buy setups on USD CHF. So I will be buying USD CHF above this resistance. I just need a 4-hour candle to close above this resistance. And if this resistance is broken, I expect price to hit this level. So that will be my profit target. And that's about 200 or 100 and something pips. This will be my first target on USD CHF. Let's see what we have on daily, sorry, 4 hour. So last candle on 4 hour closed as a, what's it called? A spinning bottom, which indicates change in trend. I could even risk buying if a candle closes above the high of this spinning top. If a candle closes above the high of this spinning top, I would execute a buy trade. And my stop loss would be, so if I buy from this point, my SL, okay, 50 pips is okay. 50 pips, what's the, okay, so I'll be risking 50 pips for 126 pips. That's a good risk reward. That's more than 1 to 2 risk reward. So my stop loss will be around this level, 50 pips. So all I'm waiting for now is for a candle to close above the high of this spinning bottom. Okay. So the last pair is USD JPY. Okay. This pair has been bullish for months. USD JPY has been bullish for months. Okay. So what I have here, okay, let's start with the monthly. Last month was strongly bearish, sorry, bullish, strongly bullish. Okay, so let's go down to weekly. Let's see what we have on weekly. Let's just look at it. If I say we should forget about yen, let's still look at it. A lot of people are making good money from JPY pairs. Just study the pair, understand how it moves, and you cash out from that pair. Okay. As they say, one man's poison is another man's choice. So last month or last week candle, we could say this is a spinning top. Also, if you apply Fibonacci from this swing high to this swing low, you can see JPY is approaching level 79. So at this level, you should expect a pullback. For me, it will not be wise to start buying USD JPY. I can't buy at the current market price. I can't buy. Price has already gone far. It has gone far. Even if you apply a stochastic indicator, you would see that USD JPY is overbought, is at overbought. So it will not be wise to buy when it's overbought. You should be looking for sell opportunity. Patiently wait for a sell setup. You can't buy now. If you want to buy, this is what you should do. There has to be a pullback before you consider buying. You can apply your Fibonacci, take it from this swing high, swing low, sorry, to this swing high. So if you are considering buying, you should wait for price to pull back to at least level 50 before you consider buying. Allow price pull back to level 50 before you consider buying. You can't buy at this price. That's not a smart move. Price should pull back to at least level 50 or 61.8. If I want to buy USD JPY, these are the levels I expect price to pull back to 50 or 61. Yes, it could get to 79. So if I decide to sell or buy at 61.8, I will just set my stop loss, few pips, level 79.0, because it will get to 79.0. So I could just set my stop loss at few pips below this level. So my risk will be less on that trade. If I decide to buy at this level and there's a possibility for price to get to level 50, if I want to set my stop loss even few pips below level 50, let's see the risk involved. You can see this is above on 600 pips. Why would you want to take such risk? Does not make sense. So you can't buy USDJPY. You can't. Wait for a pullback before you buy. So let's go down to daily. What do we have on daily? So you can see daily, this is a bearish setup. It's spinning top. They hunted for what's it called? The stop loss. Stop loss at this level. You can see they hunted it on Friday. That was what they did. They hunted for the stop loss. And last Friday, candle closed bearish. If I'm to take any trade on USDJPY, it would be sell. Sell. I will sell to level 38.2 or level 50. Let's go to 4 hour. So you can see what we have on 4 hour. So this is a sell setup on USD JPY. If you want to buy, then there has to be a breakout from this resistance. You can't buy now. You can't buy. You can't buy. It will not be a smart move. Okay, so see that price breaks this resistance level for me to buy. But my bias on USD/JPY is bearish at the moment. Bearish. Okay, so we've looked at the 7 major currency pairs. Any other pair or instrument you want us to look at, just type it in the comments space. Euro Aussie. Okay, we've looked at GBP USD. Let's look at Euro Aussie. Euro Aussie is negatively correlated with Australian dollar USD. It's negatively correlated. So if I'm looking for a sell opportunity on Australian dollar USD, I expect Euro Aussie to be bullish. I expect it to be bullish. 70 to 80% of the time, these pairs move in opposite direction. I've studied both pairs for years. They move in opposite direction. Okay, I think I still have a trade. I have a trade on Euro Aussie. I have a trade. Okay, so I think I bought at this price. It's currently trading below the price I bought. This is my entry level. You can see my stop loss. This is my entry. I think it was on Friday I entered this trade. My stop loss about 54 pips. Okay, so I'm still bullish on Australian dollar, Euro Aussie. But let's see what we have on the weekly. I'm still bullish on Australian dollar, Euro. Last week candle closed as a shooting star, which indicates change in trend after hitting this what's it called, resistance level. Okay, so change in trend. This is a shooting star. And on daily, let's see what we have on daily. Last Friday candle, bearish. Let's see, bearish. So these guys, they might hit my SL, no wala. Let's see what we have on H4. Okay, so you can't buy now. If you don't have a buy trade, you can't buy now. If you're considering buying, wait for this resistance. You can see it was a support here. It was a resistance here. Wait for this resistance to be broken before you consider buying. You could see we have a support here. So this support could hold. Okay, it's a probability. Okay, so this support is likely going to hold. But if this support is broken, then Euro Aussie could drop to this next support. Okay. So I'm still bullish. I'm still bullish on Euro Aussie. Even if my stop is 8, I would look for buy opportunities, buy setup. Okay. I will look for buy setup. So let's apply Fibonacci. I want to apply Fibonacci. I'll take it from this low to this high. Okay, so okay, the market just, you can see, has retraced to level 61.8. You can see 61.8. Or at 61.8, we don't have a key support level at 61.8. So there's possibility for it to get to 79.0. It's possible. It's possible. If this, what's it called, support does not hold, it might get to 79.0. That's my take. I'm still bullish on Euro Aussie. So that will be all for tonight's session. Any other pair? Any other pair? Okay, let's look at gold before we end the session. Let's look at gold. I'll take your questions before we end the session. Gold. Can we say gold is bearish? What we have? Let's start with the weekly. Wow. Last week candle closed as, should we call this hammer or a spinning bottom? This looks like an hammer. Okay, it looks like an hammer, which indicates change in trend from bearish to bullish. Let's go to daily. If the resistance has been broken on daily, then we should expect more bullish move on gold. So you can see what we have on gold. This is a bullish setup. The doji, the next candle has closed bullish. This is a bullish setup, and it closed above a resistance. It closed above a resistance. This was a support, turn resistance. Last Friday candle closed above that resistance level. If you go back here, you can see it was a resistance, turn support at this level. You can see that. And last Friday candle closed above this level. So at the moment, gold is bullish. Gold is bullish. If you are considering selling gold, then last week's support must be broken. So we have supports here. These are supports on daily. If you go back here, you can see it was a previous support. You go back here, it was a previous support. So if that support is broken, there's a probability that gold will drop to this next support. If the support is broken, if 4-hour candle closes below this support, then we should expect gold to drop to this next support. Let's see what we have on 4-hour. You can see on 4-hour, what we have on 4-hour here, you can see there was a support here on 4-hour, which became a resistance. Market tested that level, and there was a rejection. You can see that's the reason for the rejection we saw on Friday. You can see on 4-hour candle. So if a candle closes above this level, you could see gold price go up. If a 4-hour candle closes above this level, you could see gold price go up. So it's either price breaks this level and keeps going up, or it breaks this support, and we should expect bearish move if this support is broken. Okay, so that will be all for tonight's session. If you have any question, let me know so I can unmute you. If you have any question, if you have any contribution, any contrary view on any of the pair we've looked at, let us know. We would like to get your own opinion. Anyone has something to say? Let us know so that we can unmute you. Gabriel, are you still in the class? It's you. Are we on the same page? Cash, are we on the same page? No question. Oh, good. Okay. No question. All right. I appreciate you all for your participation in tonight's session. I wish you all a profitable trading week. Like I said, as you trade this week, ensure you apply good risk and money management, and ensure you stick to your trading plan. Very important. Like I said, this week will be very volatile. Great opportunity to make money and great opportunity to blow accounts. So please play safe this week. Ensure that whatever risk you're taking on any trade is what you can afford to lose. Is what you can afford to lose. That should be the risk you should take on any trade. Don't be too confident. Overconfidence kills in this business. Also ensure that you apply stop loss on your trades. Every trade you execute. If you don't apply stop loss on your trade, it means you don't know what you're doing. You are a confused trader. If you don't use stop loss, you are a confused trader. Okay? So please play safe. Play safe. This guy just bought his Lambo. Believe you'll be next in line. Cash, Theophilus, Abby just bought a Lambo. So I believe one of you in the next few months or few years will be able to get your Lambo. Yeah, they are killing it. Yeah, they are killing it. They are killing it. It's in phases. They didn't just start today, okay? They didn't just start today. They've been in the game for years, and those guys are risk takers. They are risk takers. If you want to make big money in this industry, you have to be willing to take some risk. Calculative risk, please. Calculative risk. Yeah. He started at the age of 70. That's Abby. So they've been in this game for a long time. A long time. All right. I wish you guys a profitable trading week. My WhatsApp line is open. If you have any question, just drop me a message on WhatsApp. Okay. Good night.